Market recap: Trump, the Fed, and rising inflation. Last week, financial markets largely shrugged off the usual tariff rhetoric from United States President Donald Trump. Instead, the focus shifted to a rumor that Trump was planning to fire Federal Reserve Chair Jerome Powell. While Trump quickly denied the rumor, adding caveats about not ruling anything out unless there's fraud, the brief Sell America reaction highlighted market sensitivity to the Fed's independence. Trump's repeated public demands for lower rates and criticism of Powell have become a daily occurrence. Legally, Trump can only remove Powell for cause such as neglect of duty, which is why his team is reportedly exploring allegations of fraud, claims Powell denies and analysts believe are unlikely to lead to his removal. The Fed's independence is crucial for market stability, allowing it to make decisions based on economic data rather than political pressure. Any perceived threat to this independence could significantly impact the United States dollar, United States treasuries, and stocks, potentially driving investors toward safe havens like spot gold. Adding to the uncertainty, Trump is expected to announce a new Fed chair soon, which could create a shadow Fed chair dynamic. Even though Powell's term is not up until May next year, several names are being floated, including Kevin Hassett, a likely choice, Federal Reserve Governor Christopher Waller, who supports a July rate cut, and United States Treasury Secretary Scott Bessent. United States inflation ticks higher. June's United States Consumer Price Index inflation data showed a notable increase. Headline year-on-year inflation rose to 2.7%, exceeding expectations and up from 2.4% in May. Core inflation, excluding energy and food, also increased to 2.9% from 2.8%. This uptick was seen in various goods, including tariff-sensitive items like furniture and apparel, as well as domestic items such as car rentals and beef. Many anticipate these price increases to continue, especially if Trump imposes further tariffs on August 1st. This could lead the Fed to keep interest rates higher for longer, contrary to Trump's wishes, while the Fed is not expected to act at this month's meeting. A rate cut in September and possibly another in December remain possibilities, contingent on economic data and the impact of tariffs. Money markets are currently pricing in just under 2 rate cuts for the year. The week ahead, ECB updates and PMIs in focus. The upcoming economic calendar is relatively light, with market attention primarily on the July S&P Global Flash Manufacturing and Services PMIs released on Thursday morning, a few hours before the European Central Bank announcement. I will be closely monitoring the Eurozone's Flash PMIs for any signs of weakness. Current market estimates suggest a modest increase across all July PMIs. Composite PMI is expected to rise to 50.8 from 50.5. Services PMI to 50.8 from 50.5. Manufacturing PMI to 49.8 from 49.5. ECB rate announcement. The European Central Bank is widely expected to keep all 3 key benchmark rates unchanged at its July meeting. This would leave the deposit facility rate at 2.0% and the refinancing rate at 2.15%, an outcome unlikely to significantly impact markets. An unchanged decision is anticipated as the bar for further easing is high, and the deposit facility rate has already been lowered by 200 basis points since mid-2024. The ECB suggests its neutral rate is between 1.75% and 2.25%. Therefore, the key focus will be on the accompanying forward guidance. While any hints of the easing cycle nearing its end would be positive for the euro, significant announcements are unlikely until there is greater clarity on United States-European Union tariff uncertainty. The euro has outperformed the United States dollar this year, rising over 12%. However, on a month-to-date basis, the euro to United States dollar exchange rate is down 1.4%, potentially snapping a 5-month winning streak. Technically, the pair is in a strong bullish position, with potential buying interest around support at 1.1611 United States dollars, and an initial upside target of 1.1849 United States dollars. Additional key events this week: Tuesday, July 22nd, 12:30, post-meridian GMT, United States Fed Chair Powell is scheduled to speak at the Integrated Review of the Capital Framework for Large Banks Conference in Washington, D.C. Thursday, July 24th, 12:30, post-meridian GMT. United States weekly jobless claims for the week ending July 19th. Early estimates anticipate a rise to 228,000 filings from the prior week's 221,000. Friday, July 25th, 6 o'clock, anti-meridian GMT, United Kingdom, month-on-month retail sales data for June. As a key indicator of consumer spending, this will be closely watched, with expectations of a 1.2% gain following a 2.7% decline in May. To follow my genuine social media channels, visit dhandathegreat.com